Even the CEO of Amazon, huge company, he's looking at uncertainty. What do you think about the uncertainty that we have even today? The jobs report coming up after that ADP report that was very hot. It could be another blowout report, which a lot of people think seals the deal on another rate hike.
Look, let's take a look at what we're looking at. It's actually this balancing act, and we haven't been in that position for so long. So what's on the positive side, which would make you say that the second half's going to be okay? Real wages are increasing. And if you have real wages that are increasing, it means that the risk of a recession is very, very low, probably non-existent. And you also have a really strong labor market. And that's why, as you said, today's data is going to be so important in terms of the labor market data. And you saw the JOLTS number yesterday. The job openings continue to be strong. So we're really focusing on that, the strength of the economy. That's one side of the equation. The offset, as you say, is some manufacturing uncertainty, and people are focusing on that in the commercial real estate market, which has got the associated weakness there.
So it's a bit of a mixed picture,
yes,
in all fairness. So with that mixed picture in mind, what is your WEX word of the day?
My WEX word of the day is anticipation, because we are going to get information, and that information is going to come in the form of earnings and what companies are going to be talking about for their second half outlook.
All right, so still looking at this jobs report, what do you think it's going to tell us about the economy overall? A lot of people are expecting big gains when it comes to leisure and hospitality. What other areas are you expecting to see gains, or maybe even a lot of openings that can influence the second half of the year?
I think where we're seeing openings and where we're seeing a lot of unfilled positions is in manufacturing, and that's being driven by a couple of things. The first is our drive to reshore and onshore manufacturing, and we need workers, and we really haven't had that underlying demand for those type of workers for many, many years. And what is that doing? It's meaning that CEOs, and I spoke to a ton of industrial CEOs, they're holding on to their labor really, really tightly. And so even if there's a little bit of manufacturing weakness that we talked about, the labor is still employed. And that's really good for the economy. So what we're seeing is these CEOs are balancing the fact that I've got some labor, but I don't have enough. And they may need some automation.
So kind of a labor shortage. So with that in mind, I know you have some stock picks for us. How can you play the idea that there's still a persistent labor shortage? And
that's exactly what we talk about with that word automation. We are looking to automate various things. And the two plays there that we're talking about is Rockwell Automation, which is a leader here. It's based out of the United States, and they help factories automate their workflow. You're also looking at their competitor in Germany, which is Siemens. They have a global presence as well, and they're another company. And what this is really the quintessential replacement of capital for labor. And we've seen that happen over the years.
So you're talking about a long-term trend. Very quickly, would you put money in these names today? Is this where you would invest today, especially on the back of this jobs report?
Look, we own Siemens. We think that it's not only this really strong automation trend that's supporting it, there are some other company-specific catalysts that make it a really interesting stock for investors. And it's one of those great companies you can buy here too.